There are a lot of myths that surround financial statements. Are you falling prey to any of those myths, some of which are very damaging? Let's find out why and how. If you want to rid yourself of these damaging financial statement myths, it's important you learn some key secrets. One of the most damaging myths relating to cash flow is something many do not understand, and that is profit and cash flow are the same. They are not. Welcome to the ultimate guide on financial statement myths. We bust myths about financial statements, which are commonly misconceptions many who read financial statements fall into. So, this ultimate guide on financial statement myths will be all about common misconceptions while reading financial statements. It will help you become a better reader of financial statements, and you can leverage that for powerful decisions in your hotel operation. So let's get back to our discussion. Profit and cash flow are indeed related closely. However, the fact is they are not the same. If you dig a little bit deeper, you will find out the real truth, and that is profit generates cash flow. I would urge you to watch all the way to the end of the video, as I will be sharing with you the moral of the story, which is a secret that will help you understand cash flow 10 times faster, and you will retain the knowledge longer. You would want that, won't you? That's a promise. Let's go. We will take a visual look at the cash flow concept. This will make us understand the concept itself so much better. However, before we get into the main myth that profit and cash flow are not the same, we will look at another myth and bust it. The related myth is that cash balances and cash flow are the same. This is another myth that actually impacts the main myth that profit and cash flow are the same. So let me take a visual example on this. Assume you have the cash and bank balances as of March 1, 2022. Now, by itself, the cash and bank balances will not allow you to get to cash flow. And why is that? Well, because in the definition of a cash flow, you need two periods to determine cash flow. And so let's assume that same cash and bank balances at the end of the month, March 31st, 2022, is a certain number. Now we are all set to determine cash flow. And what is the cash flow? Well, it's the simple difference between the cash balances between two periods. In this case, between March 1, 2022 and March 31st, 2022. And the difference is known as the cash flow. In this particular case, it's plus 130,000 or a positive cash flow. What we mean is that the cash flow at the end of the month of March 2022 is 130,000 better than March 1, 2022. So here is the first myth busted. that cash flow is not the same as cash and bank balances. So, in the concept of cash flow, there are three elements that need to be considered: an inflow, an outflow, and the difference between the inflow and outflow, which is known as a net flow. Net flow can be positive or negative. We saw in the earlier example two elements back cash flow concept. One is that there is a movement of cash in the inflow and the outflow, and the movement is between two periods. Let's now get to the main myth and bust it. We're going to be using a table. You will notice on the top column, there are 3 months laid out, but each month, January, February, and March, has two elements to them: a month itself, like Jan, and at the end of the month, which is Jan 31, and similarly for February and March. And then we'll do a totals and end of the month column at the end of this particular visual example. On the left side, in the rows, you can see three elements: revenue, cash inflow, and receivables. As we all know, revenue and receivables are connected, but not in the way you might have assumed them. And of course, expenses and cash outflow are related through payables. And finally, we will find out the difference between revenue and expense, which is profit, and find out whether the cash net flow, the last row in this visual, which is the difference between cash inflow and cash outflow, is it the same as profit? This is the part where we'll be busting the myth. So let's go. Let's first take revenue for the month of January and assume it's 10,000. We're going to be assuming that this 10,000 is earned by incurring an expense of 6,000, leaving you a profit of 4,000. Now, we will take an extreme assumption number one, that the entire revenue was received as cash inflow. So as you can see, that's 10,000, the same as revenue. And the entire cash outflow was paid out for the expense. As you can see, cash outflow is the same as expense. So although profit is $4,000, which is revenue minus expense, cash net flow is also $4,000. And why this is this? Because we have assumed that all cash inflows and outflows are the same as revenue and expense. In reality, they are not, but we'll find out why. We also will notice that receivables and payables are zero, because everything that was earned as revenue in the month of January was received as cash flow, and everything that was incurred as an expense in January was paid out as cash outflow. So receivables and payables are zero. However, most people who read financial statements fail to see this connection between receivables and revenue and cash inflow, and payables and expense and cash outflow. In the second month, we will take extreme assumption number two. Here, first, revenue is considered 12,000. You incurred an expense of 7,000, leaving you with a profit of 5,000. We will take extreme assumption number two here and assume that there is no cash inflow during the month and no cash outflow during the month, leaving the net cash flow also zero. Now, here comes the connection between the revenue and receivables. If you earned a revenue of $12,000, but you didn't receive any of that in your cash inflow, your receivables will be the same as your revenue. Similarly, if you incurred $7,000 and did not pay out anything in the cash outflow, your payables are equal to your expense. Finally, in month three, we will take the assumption which is in real terms, in reality, what works. So there's a revenue of $15,000, an expense of $9,000, leaving you with a profit of $6,000. Now, assume in this month that you didn't receive all the revenue as cash inflow. You received only 12,000, and you didn't pay out all the expense of the month. You only paid 5,000 out of 9,000. So what does this make your cash net flow? $7,000, which is different from the profit for the month. And how about receivables? Well, receivables are $15,000 because you never received any of the current month revenue as cash inflow. So, what is this $15,000 relating to? Well, this $15,000 is relating to the March outstanding of revenue. You only received $5,000 against the $9,000 expense. So the $11,000 payables is actually the $7,000 you did not receive in February, and the difference between expense and outflow in March of 4,000. So 7,000 plus 4,000 is 11,000. Now, finally, if you total January, February, and March, you received $37,000 in revenue, incurred $22,000 in expense, and you had a profit of 15,000. What about cash inflow? Well, it was 22,000 cash inflow, 11,000 cash outflow, and a cash net flow of 11,000, which is different from the profit of 15,000. This is the myth that we are busting, that profit and cash net flow are not the same. Now you would have a question. What happened to that 4,000 difference between profit and cash net flow? Well, the 4,000 is represented by a 15,000 receivables and 11,000 payable. So you can see the receivables are higher at the end of March 31, which is the end of 3 months, and receivables are higher than payables by $4,000. That $4,000 is the difference between the profit and cash net flow shown in the totals column. So let's summarize. Cash flow has two main ingredients. One is the movement, and the other is between two periods. So the movement and the two periods determine the net effect, and that would be an inflow or an outflow, and that is known as the net flow, as we saw in the previous visual. Cash inflow and outflow, therefore, is not the same as revenue and expenses. What's the moral of the story? Something that you can take away. Firstly, profit and cash flow need not be the same at any point of time. The truth definitely is that profit generates cash flow. So they are related, and you could say one is dependent on the other, although not entirely. If you like this video, subscribe to Profit's Masterclass channel for future videos straight to your inbox. What would it do for you? Well, it'll rid you of damaging myths about financial statements.